Okay, um, we are launching this webinar now. This is our WIP Work in Progress Masterclass. Um, this is one of those topics that people really struggle with. We're going to really unpack it today. Um, it's also, though, Dan, it's one of those things that actually the WIP calculation itself is pretty straightforward. It's all of the upstream activities that you need to have in place so that you can actually do the WIP with the WIP calculation.
Yeah,
So we're going to
Mm.
unpack aspects of that as well. But if you're just joining us now, welcome to our WIP Masterclass. Thank you for coming along. We run this one semi-regularly just because of how important work in progress is in project accounting and in the construction industry. If you don't know it, you're really going to be struggling to understand profit position, margin position. There's a whole lot of repercussions. So we do run this one semi-regularly. Yeah, so we're going to kick off. So I'll just share my screen now and we'll get into this. So just a little bit of housekeeping to begin with. The agenda. So we're gonna sort of just set the table a little bit around what WIP actually is. So if you already know that, hang in there. We're going to get to more media, the media side of WIP, but I think it's really good to take a foundational approach to this sort of content. So we'll start with, what is WIP and why it's so important. So that's the sort of the first section, and then we're going to walk through our tool that we use and we share with clients. It'll be available after the call as well. Dan's going to take us through a really handy tool that we use, and it's a good way to then see WIP being calculated through as well. Hopefully it'll help join the dots even further. In terms of the logistics for today, please drop your questions in as we go into the chat. We've just shown that the chat works, so please do that. Send it to us directly if you want, but I would encourage you to share your chat, your question into the chat for everyone to see. If you've got the question, I'm sure other people will as well, and it might prompt other people to ask a similar question. So please feel free to share it with the whole room. I mentioned the WIP tool. We'll be sending that afterwards, after the session, along with the recording of this session. So that'll be quite neat. You'll be able to have the spreadsheet tool as well as the recording of Dan walking through how to use the tool. And so you'll be able to pause, use the tool, etc., bring your data in. So it can be quite an interactive thing for you. We're going to run a couple of polls just to keep it a little bit interactive on the way through. There's just a handful of polls, as well as a poll at the end. We've just got a couple of where to from here questions. If you want to do a one-to-one session with us on WIP, you're just really struggling with it and you'd like us to help you work it through, we're happy to do that as a complimentary service. And there's a couple of other questions that we'll have at the end there too. And then right at the end, before you log out, you'll get a survey. We'd love to hear from you about how it went today for you, what you thought of the session, and if there's any other topics that you think you might be interested in that we could cover off. So just quickly about us, Xact, if you don't know, we're like a growth partner for construction businesses. So we offer a suite of services starting with financial control and bookkeeping. So all that transactional level of data and keeping on top of how data is flowing through your business on the financial side of things, and some reporting around that as well. Our compliance team will get you set up in the right structure for the sort of business that you're carrying out. You might be doing property development on the side. You might have SMSFs and things like that. So we design structures that are specific to the building and construction industry, both for tax optimization, but also asset protection. It's a risky business. So you want to make sure you've got a structure that helps you out from that perspective and will scale as you scale. And then finally, advisory, which is Dan, who's driving the content today, heads up that team. It's all about strategic, commercial, and financial advisory for construction businesses. So there's a whole suite of things that they do in that team. We're going to be touching on, so WIP, this is I guess a sweep of the sort of services that Xact Advisory can help out with. So it's quite a diverse mix. The concept of WIP is actually, it sits across a number of areas. So clearly it's really important from a financial liquidity cash flow perspective. There's a regulatory component to this as well. So a lot of the home warranty schemes, the state-based schemes around the country will look at your WIP figure if it's rubbery or it's not, if you don't have the right kind of underpinnings behind it and logic behind it, it can be questioned. So, and it's often the thing that gets people over the line when they're trying to get the next license break, for example. So it's important from a regulatory perspective. And there's a whole lot of systems and process piece that you need to have in place to be able to land that WIP figure reliably and confidently month in, month out. So, so WIP sort of spreads a few different areas in terms of the work that we do with clients. Just by way of introduction to Dan, we've used this slide before. I think it's kind of a good way of showing that there are accountants and there are accountants. So we've got two accountants on screen here. One is Dan, head of advisory, and Josh, who's a partner in our compliance division. They're both in their mid-30s. I might need to update this, Dan, maybe mid to late 30s. They're both university qualified. Obviously, you can't work in this space if you don't have all the degrees. One's a CPA, one's a CA. They argue about which is better all the time. I don't really care. They're both partners in a respected firm. They love their numbers. They live in a financial world that is driven by data and numbers. And they're both clearly good-looking roosters. The difference is, though, is that Dan is all about helping people make profit. So it's very profit-driven and growth acceleration-driven. So it's the commercial side of accounting, as opposed to Josh, who we're probably more used to, which is more of a tax accountant, and often looking at what's happened in the past to make sure that we're not paying any more tax, or we've got the right structure in place, for example. Whereas Dan and the advisory team and the commercial accounting, yes, they're looking at past performance to see how we're traveling, but it's very forward looking in commercial accounting, and we're trying to forecast what the outcome is and provide some more certainty around what that growth trajectory looks like. So I thought that was kind of just a bit of good context in terms of, you know, the different types of accounting that you have in play. So I'm just going to run this quick poll now before Dan gets going. And so we want to know what your current approach to WIP is. Who calculates WIP for your business? So I calculate it myself, my accountant, my bookkeeper, tax accountant, or outsourced commercial accountant, CFO advisor, or nobody. I'm not doing it. So who's calculating WIP for you? How often do you calculate WIP? Is it a monthly? You know, it's part of your financial position. So I'm going to do it monthly. Am I doing it once a year for QBCC or tax purposes as part of my statements at that point in time? And then be honest, out of 10, how accurate is your WIP figure? Is it a bit kind of push it around the plate, or is it 100%? I'm super accurate here. So we've given you lots of options there. Out of 10, how accurate is your WIP? So I can see there's lots of responses coming through there. I'll just end that poll now, and we can share those results. So a lot of people, so the vast majority of people are doing it themselves. So I think this session will be really valuable for you. Hopefully we can help you improve that process and how you're doing it. In terms of how often, good to see At least a third are doing it monthly. So congratulations to those people. That's good. And this will hopefully be about incremental improvement for you. Those who aren't, hopefully by the end of today, will have convinced you to do it as a monthly process. Out of 10, how are we rating ourselves? We've gone for 7 as the most popular, 7 out of 10, but it is a real spread. And no one said 10 out of 10. So I think that's a pretty good benchmark for us in terms of, where to from here with the content. So Dan, I think that's it from me. I was going to introduce you, but I think I've kind of done that on the way through. So if you want to take over from here, that'd be great.
Yep, I'll jump in and tag in. Thanks very much. And look, everyone, thanks for jumping online today. I know everyone's time's really valuable. There's lots of spinning plates, people, contracts, life, etc. But this whole concept of working on the business and understanding the importance of work in progress in particular, it's almost like a non-negotiable staple for us when we tag in with a client. WIP and job costing are the two cornerstones of that financial clarity piece. So congratulations to everyone for jumping online. And again, please send questions through as well. Phil will jump in and stop me if there's something, I guess, topically relevant, but definitely shooting questions, big, small, whatever it is, or definitely click on that link at the end if you want a one-on-one session with me or with someone else. But yeah, let's get the most out of it. So Phil, just before I jump in, mate, that's all sharing okay on your end?
Looks beautiful, mate. Yep, go for it.
Okay, so I'm just going to apply a bit of a assume nothing rule here for the context of the audience. Again, I'm just going to go back to basics, assume nothing, and sort of explain it slowly, and then we'll get more into the technical stuff later on. But the simple definition of WIP is that there's either positive WIP or negative WIP in construction businesses overall. So the best way to think of WIP is, because obviously, the construction industry is lumpy as far as claims go, whether you do cost plus or fortnightly, monthly, whatever happens to be, stage claims. But essentially, WIP is the portion of either the work you've done where you haven't received income for or pushed an invoice out, or if you run your business with what's called negative WIP, it's the amount of money that you rip in from the client or bank that you haven't spent it yet. So positive WIP, for example, would be, say you jumped on, a residential roof, you installed the roof, you have the labor costs, you have the materials costs, but you haven't pushed out the revenue, the invoice for that stage claim, as it were. So what you have there is that if you'd be looking into your P&L, you'd be seeing a loss in there and going, oh my God, what's going on? But that's actually positive WIP because you've spent the money, you've sweated out, that portion of the stage claim. We just haven't pushed the claim through. So you've actually got a WIP asset in there. Just the invoicing side and the cash side hasn't caught up to the effort and the reward you were due, obviously, for that portion of the, of the build. And negative WIP doesn't mean bad. I love negative WIP because it means you're leveraging the client's money, the bank's money to fuel and fund your project and the business. So negative WIP means that you've got your usual 5% claim up front, and then you might be able to front load your contract. So you get lots and lots of cash in and invoices. And then towards the end of the project, obviously claims slow down, but you have this war chest of someone else's money to fund the projects, which I love, by the way. So negative WIP is you might be getting a huge amount of cash in, or you might have a huge accounts receivable ledger in the background. But my word of advice is if you're running your business via your bank account and you go have all this cash and you don't know what portion is negative WIP, and can be incredibly dangerous. So I have seen quite a few clients and even potential clients get caught in that trap. They manage their business by that bank account and go, oh my God, I got all this money. But again, builders' margins are very thin. And particularly if you're in that commercial space as well, your margins are usually single digits, especially around the gross margin. There's not a lot of wriggle room. WIP really bridges the gap between cash and profit overall. So that's the one-on-one, the 101 on positive and negative WIP. Either are okay, but whenever we talk to clients, we love negative WIP and how do we gear ourselves that way? Where it's contract structuring, obviously negotiation with clients, the type of client you get on board, et cetera, et cetera. So this is a visual example of WIP does. So obviously we busted out our crayons here. I'm quite a visual learner as well. So this really works for me. So again, we're just applying the assume nothing rule. So let's pretend we have a renovation of 500K. We're doing a deck extension or adding a room or something to a house, but the total contract value is $500,000 overall. We're not talking GST or anything like that. Anything like that. And I guess in the context of this, the GST obviously goes to the government. So this is all ex-GST, just to add a bit more clarity here. So the total contract value is $500,000. The cost to build that deck or extension, whatever it happens to be, is going to cost us $400,000. So obviously $500,000 minus $400,000 is we're hoping to make $100,000 of gross profit. Pretty straightforward, pretty linear. this is the contract establishment. It's going to be a really important part for our WIP model later on, but this is what we're selling the contract for, and this is a fixed price model, not a cost plus. WIP's a little bit different, obviously, the cost plus. So the revenue is generally fixed, the costs are generally fixed. We're not dealing with provisional sums or PC items just yet. We're just going 101 basics for now. And then the whirlwind starts. So obviously we get into the contracts. We're a couple of months in, and we go, well, we expect this contract to cost us 400,000, but now we spent $100,000 of actual work. So it could either be erecting, I don't know, erecting the deck or groundworks or whatever it is, but we spent $100,000. So if you got $100,000 divided by $400,000, from a cost perspective, we're about 25% of the way through the project. Now, when you reach the end of the month, say September, you've reached the end of the month and you've only billed the client $100,000 for whatever reason. Could be a deposit and a minor stage claim, whatever it is. You're going to run your P&L and go, oh, I've made no money this month. Well, my view is going to be rubbish. If you're swinging the hammer and you're not burning costs along the way, you are entitled to some profit. Not all the profit, but some profit. So if you go forwards a little bit further again, so if we are 25% of the way through our costs, we're actually entitled to 25% of the revenue and ergo 25% of the profit. So we're actually carrying what's called a WIP asset here of 25,000. So all we've done here is we've gone, here's $100,000 of costs as a percentage of the overall cost base of the project, 25%. We should be entitled to 25% of the revenue and 25% of the profit, but we haven't billed very much for whatever reason. Well, our WIP asset position is actually $25,000 overall. So what does that mean? It means if we didn't pick up this calculation, we'd be freaking out about cash and money. Our balance sheet strength is actually understated because you actually sweated out some sort of effort, cost, people, labor, materials. So you're actually understating your profit and loss. And you're actually understating your balance sheet as well. And I'll talk about the impacts about that later on. And this number can swing massively month to month. Like it doesn't matter if 1 month is a big positive and next month is a big negative. As long as you do this calculation, I'll talk about how this builds up shortly, but it's really important to keep the finger on the pulse because this is absolutely a commercial accounting entry. Tax compliance is obviously really important, but you do this process monthly, not, I guess a QBCC MFR time or when the bank jumps up and down around covenants.
Dan, there's a quick question in there from Jordan, but Jordan, I can see it. We might just come back to that because it's a bit of a tactical question around, how do I get away with more negative WIP with the banks? So we might just circle back to that once we've laid out the foundations here.
Yeah, it's a really good one. I love those questions, so please jam them in.
We'll come back to that one. Yeah.
So we're talking about why is WIP important. So construction is incredibly lumpy. Obviously, at the start of the project, it's a bit slow. Earthworks are really big, but when you sort of reach PC and handover stuff, everything sort of slows down. So there's ramp up and ramp down, and depending on your project model as well, you might outsource everything, or you might have large, cabinetry packages, wherever it is. It's up and down, and super lumpy. And the philosophy behind business is keeping the finger on the pulse, knowing your numbers, and WIP is absolutely a cornerstone to work out where you are with all this cash flying around as well. So it's important because project accounting, I guess building construction is lumpy as far as claims and activities go, and project accounting is also lumpy. So if you don't have work in progress in place, you're going to be looking at P&L and go lost profit, lost profit. December, January is a bloodbath. And what I see like a lot of clients do, or potential clients as well, they sort of jump and go, look, I can't figure it out. I haven't got the time. I'll look at my cash at bank, and if my cash is good, I'll be okay. I just can't stress how dangerous that is. And I'm not trying to generate fear or anything like this, I guess, at all as well. But if you're business owners or key stakeholders or shareholders, absolutely knowing your numbers is absolutely critical to make sure you're okay. Because cash can come and go, and there's ways around cash, whether it's through banks or second, third tier lending, whatever it is. But I promise you, if you micro-measure profit, 99 times out of 100, cash as a byproduct catches up. And if for whatever reason you're running a WIP positive business, a WIP asset, which means you're spending a truckload before you get claims in. So commonly CMP businesses like that are usually sort of caught in that whirlwind. There's other ways to unlock, that asset and flick it to cash in the background, obviously with the right advice and support. And WIP is the bridge. So The philosophy in business is that you micromeasure profit to within an inch of its life, always gross profit, because overheads usually sort of float around and they're easy. Measure gross profit to within an inch of its life, fold and WIP there to get the financial clarity you need. And cash is the byproduct of that success. And obviously making sure you have the right disciplines, people, cash, assets in place, the rest will work out. That is why WIP's important. So who is it important to? Banks are a big one, obviously. So if you present a set of financials to a bank and you're trying to get into a development, or you're trying to buy 3 or 4 cars, you're trying to buy a new shiny excavator, or whatever it is, banks don't like P&Ls of businesses that are up and down, and aren't very predictable. They don't like a couple of months are a huge profit, a couple of months are a huge loss. Banks are incredibly risk adverse, and funnily enough, banks only lend to businesses, or their appetite lending to businesses is only grows if the business is actually successful, right? Which is sort of counterintuitive when you go, hey, I'm in the hole, I need money. They go, well, what does the future look like? Oh, I don't know. What's your WIP position? That money in the bank, how much of that's yours? Because WIP unlocks that clarity around that. Oh, I don't know. Banks go, oh, yuck, next. Good luck. Go see a second or third tier that's going to charge a credit card interest on a $500,000 loan. So banks love it. The other one, the reason why WIP's really important, because again, with WIP, it'll tell you if you're making money or not, sort of month on month, in a month's, I guess, other commercial accounting methodologies. But if you're a partner in a business, or I guess you're a shareholder, or even if I was, I guess if we were doing private equity or something down the track, like I'd want to know if the business is okay. Is the business making money month to month? Like I almost want to know sort of weekly in some instances, depending on the size of the business. My background is ASX, and we usually get visibility by week. I think that's probably a bit heavy for the BNC space, sub 200 million. But yeah, I'd want to know, is the business okay? Is it making money? Ignore the cash at bank, but don't get me wrong, cash is important. It's oxygen for your business. I'd rather have a war chest in there of X amount of cash plus an overdraft I can break in case of emergency. I'm sophisticated in running my business as best as I can with negative WIP. I know my numbers, I have my budget forecast, and I want to know that the future's okay. So partners and shareholders, super, super important, because it's your money, your livelihood, your risk. Directorship is obviously incredibly risky if something goes wrong or bad or curly. So I want to be across that as best I can. And the final one, which everyone will be familiar with, is a regulator. Obviously, particularly QBCC, ICARE, whatever it is. Coming up to reporting period, like whether it's 31 December or whatever it is, I wouldn't recommend doing the clench and hope strategy and going, oh my God, am I going to pass? If you have strong commercial accounting in place, you should know months out, to be absolutely frank, minus a big legal claim or something like that. Like you should be pretty comfortable around your current ratio and your net tangibles, because your balance sheet tells you that. And your WIP will unlock probably 70-80% of that noise in your financials and go, well, am I okay? Yes or no? And then if you're not, you should know 4 or 5 months out that you can talk to your tax specialist like Josh, who's a rock star at it, and so is his team, and go, what's our strategy to do it? Not get to the 25th of December and go, oh my God, my accountant's crunched it. What do I do? Tip the house in, whatever it happens to be. So there are lots and lots of good things. So WIP as a calculation is simple, but how we use it and how we roll it out, how we apply it, what clarity does it unlock is tremendous if we get it right. And every big business I know, particularly in that building construction trade space, uses WIP as an absolute non-negotiable for us. So this is actually from a couple of clients that we have on the go, actually. So usually we do like a bit of a deep dive process, have a bit of a look. And again, this is plotted out, I guess, manually. So profit, and if you're not using WIP, your P&L probably looks a little bit like this.
The roller coaster.
Oh my God, up and down, up and down, up and down. Yeah, for example, usually December's usually excellent. All these claims out because you've got 2 or 3 weeks of leave. Everyone disappears to Fraser Island or whatever it is for 3 weeks up until Australia Day. December, January is going to be bloodbath of cash. So usually December's nuts, and then just before restart, like all the claims and invoices go out, and it's up and down, up and down. And then if I'm looking at this as an owner or a banker or a major stakeholder, or if I was an investor in you and your business, like this doesn't tell me anything. Like, do I chop a bit of that $1 million there and push it back and slide shuffle it? And you can't run your business with the back of the beer coaster approach. But there are tools and resources and people that can obviously help you get that clarity. Because good, bad, or ugly, I just want to know. If it's good, high fives and hugs, let's get on with it. Or if it's not, well, what's the call to action to get it right? Again, people, cash, assets, execution, clients, whatever it is, what is the call to action? Because again, the calculation of the tool is really important, but more importantly is what do we do with that information? That's the important piece that comes after it. So this is a existing client we have now. Obviously, the data is a little bit aging, but you get it. But as you can see here, like this is a lot more predictable. We're only looking at profit and loss here. This is the profit by month charted. December, January is not very fun, but it's still green. We're still getting the work out the door, the invoices out, the jobs out. That's what we want to see is nice, boring, predictable, which is a precursor of a well-oiled machine and a nicely run business. So it does take a little bit of effort to get there. And again, WIP's the calculation. We don't want the tail wagging the dog, but it gives us the temperature check to go, are we okay? Yes or no? So as I've mentioned a couple of times, the WIP calculation itself is actually really easy. With the utmost respect to Mum, I would probably teach her how to do it, to be frank, with the right data.
I think, didn't she teach you how to do it, Dan?
Yeah. Back in the day. But there's a lot of stuff upstream, as Phil would say, that we need to get right. So absolutely, if you have good data, good information, good job costing, good bookkeeping and financial control. So obviously you have your COGS and your overheads sort of split separately. And if you have any questions around those allocations, please drop them in the chat, but being really disciplined around, well, what does a job cost? What's the cost of goods sold or direct cost versus overhead? That's critical. Because if you don't get those in the right bucket, it's going to make, I guess, your WIP calculation, your financial visibility absolutely rubbish. So really good bookkeeping, really good disciplines. I can't stress that bookkeeping is everyone's responsibility, or as far as getting the right information in the right bucket. Your poor bookkeeper is usually the last person in the line as far as information flow goes. So when you're getting, so ideally you have purchase orders in place, you have the right supervision sort of sign off. You as a owner take an interest as well. Don't just go, oh, it's the bookkeeper, they're not coding. I like lean in, give them coaching advice, guidance, because if you get the costs into the right hole, your job costing will be accurate. And the job costing stuff then tips out into the WIP calculation. And then you get a whole of business snapshots go, are you okay or are you not? So there's always incremental pieces upstream that tip into the business that go, am I okay? Yes or no? And then the most important part out of that is what's the call to action? What do we do with that information?
And it's that whole, I don't know if people have heard that flywheel concept, but there's an initial piece around setting a lot of this stuff up that just takes a bit of effort, like it's the difference between a well-functioning business and not, is having these systems and process in place. We've got some resources on our website around best practice when it comes to financial controls and bookkeeping. So have a look at that. And we, from time to time, we run webinars on that. It's obviously pretty tightly linked to the sort of software you're using as well. There's a whole myriad of options in that space. And then also particularly as you scale, there are different software options that you can be considering that can make this part of your financial clarity easier to get to and almost sort of force you into the discipline that you need to get the clarity that you need. So happy to sort of talk through those offline as well if you want to do a sort of one-to-one around, software procurement. What should I use in my stack? Happy to kind of give advice around that side of things too. But like Dan was saying, the actual working out of WIP, if you've got the right formulas in place, is straightforward. It's getting the data in and having it coded up in the right way in the first place so that you can actually see job by job what costs are being incurred and where you're at in terms of progress with each of those jobs.
Yeah, beautiful, Phil. And again, technology is getting so cheap and so accessible. I literally met with a C&P business yesterday actually, and they're still doing timesheets on paper. And I was like, God, like you guys as the owners, I was too honest there. Sorry, yeah.
Vomit.
I'm like, you guys need to value your time as $1,000 an hour, and hand scribbling timesheets on a paper and then typing it in and then double checking into the manual calc. It's an absolute killer. So absolutely, and again, I gave a couple of tips around software and data, and based on that stat. But yeah, again, if you have any manual process like that at all, please can it, please stop it. Spend some time to work on the business, do some self-education, or speak to other people in businesses. I guess other people in your network and go, what do you recommend using? So if there's anything manual in the business like that at all, please stop. And then lean into technology, cheap, accessible. It's really going places. I just want to spend Do you want me to jump on any questions, Phil, or keep moving? Or
No, just keep pushing through. I think it's good to let's get this foundational bit in around job costing as well.
okay. So the other piece around job costing, so I'm just going to do a bit of a 101 piece here, assume nothing real as well. So me with my, I guess, advisor's hat on, or if I was I guess, a part shareholder, I guess, in your business, and the way you need to think is as a invoice comes in, obviously it needs to go against a job. And what I want to see it go against is a line item in your quote. Or if you're particularly sophisticated, because obviously the way you estimate is pretty different to the way I guess your job costs. So ideally, like larger businesses would have the estimate. It then gets packaged up into a work breakdown schedule. So here's a plumbing package, cabinetry package, whatever it is. The POs then go out of there, or the letting happens in the background. And then as you get the invoices in, you match it against that original let and go, have we made money or have we come on budget? For example, like if we have a rough in package here to the tune of 22,000 and it comes in at 22,000, I just could not care. So when I'm doing my end of month piece of clients or doing the weekly check-ins, could not care. It's a budget to plan and move on. If the estimate or the work breakdown schedule or the letting package is 22 and it comes in at 18, high fives and hugs, we've made additional margin. So that end column on the far right hand side, that is the kingpin of to what I get fired up about or what I get excited about. So in this instance here, we had a estimate that was 22 for blah. It's coming at 27 grand. So one minus the other means, well, we haven't defended our margin. We haven't defended our profits. Something's gone wrong. So it's either our estimating processes haven't worked. Either we've had to swap suppliers, we got our scope incorrect, or the trade or suppliers is having a go. Here you go. Here's a sneaky invoice for a bit more, which I've seen over and over and over, but it's getting less and less prevalent as time goes on. But we have to work out the reason why and then go, well, on this scoreboard now, we're actually behind by $5,000. And us as a leadership team, how do we claw that back? How do we, I guess, recover it, rejig the scope? Can we pull PC data? Whatever it is, that's the call to action. So the calculation or the job costing piece is the mathematical question, I guess, calculation, or I guess the internal business process that gets it in. The more important piece is what do we do with that? Because it's all well and good to go, oh, yeah, that's interesting. Well, no, it's
Yeah.
your money, it's your profit. Do
And that
something.
that's where you can get creative, Dan. I know, you guys do a lot of work around incentive schemes and things like that. I mean, time is obviously one of the biggest drivers for profit outcome. And if we're sitting, with a negative position there in terms of how our profit's performing on a particular job, well, okay, guys, let's do a sprint over the next 2 months. I'm going to share the upside with you. If we can bring these projects in on time or under time, then we can all benefit from that. So, but you can't have those conversations if you don't have the data and the visibility in front of you and the certainty that clarity can give you. So job costing, we bang on about it a lot. It is a really important, it is one of the pillars of financial clarity. So we're going to just do a quick, actually, Dan, while I'm doing this, there's a couple of questions in there. Did you want to have a look at those while I
Yes.
launch this poll?
Yes. So just going back towards the top. As a solo trader, is positive WIP, sorry, is positive WIP good for business? As I'm only using positive WIP. Um, I love negative WIP, again, depending on the trade or discipline or business model you're in, and again, the sophistication of the client as well, because it's more of an art than a science. Like there's nothing structured that says you have to do this percentage at this claim and this percentage. It's all in the art of the deal. If you're running a WIP positive business, I mean, you need to make sure you account for that and just understand cash flows always will generally will be a bit of a pressure point because obviously you're spending the money on the trades and materials, kitting out your ute with all the gear. Don't freak out when the cash balance is obviously a bit low or a bit light, unless you've got a big war chest there. And I've got an opinion as to what a war chest should be for building construction businesses. But it's really important to understand that. So if you are running a WIP positive business, numbers are really important and clarity is really important as a cornerstone. But I'd probably stress the importance of more of having that in place. Just so you go, oh my God, my cash is low. Well, actually, I'm carrying 100K WIP asset. Or if you're talking to a bank, you're getting pressure from them around covenants or you have your partner going, hey, can we go on this holiday? Well, I've got this WIP asset. If I do this, get the cash, then yeah, we can go on that holiday in Christmas. Um, Ideally, you want to get more of the client's money into your pocket as much as you can. Sorry.
The
Yeah.
just the next question there was around Frank's. Thanks, Frank, being honest with us there around the nature of the quoting system. Can't guarantee precise margins at the outset of the project. At this stage, it's merely an estimate, although the business relies on this data. So it's a hard thing to grasp. I mean, I think that the estimate is something that, yes, you start out with an estimate, and you're going to cover this off in terms of our approach to WIP, dialing in other things that we learn about as we go. So yes, we might start out with a particular estimate, but once we encounter variations, once we uncover unknowns that we didn't know about, that are costs that we're just going to have to incur, we have to load all of those in on the fly and update our estimate, or what our cost is going to be ultimately, that we're going to be comparing for the WIP calculation. And so it's a ongoing, evolving thing. Your best guess is better than nothing at all. Yeah. And the more accurate you can get it, the more of those things that you uncover, even if you wake up in the middle of the night and think, oh, holy shit, I don't think I've factored in the fence, or whatever the case might be, and I've just missed it, then there's an opportunity to build that in to the calculation, so that we can capture that, rather than it floating on forever and catching you down the track as something that will bite you in the bum. So yes, I can see, you're struggling to get that ultimate accuracy, but I think to a certain degree, everyone in this business is. So it's a game of just incremental improvement all the time to try and just level up that accuracy, certainty piece. Another one there, just to us around a particular combination of one to build and zero, and helping refine the financial processes. Can we help with that? Absolutely, we can help with that. We've got capability in-house around all the sorts of software stack that you could imagine in construction. It's sort of, we have to know that. So if that's something that you're struggling with a particular, whether it's Job Pack, Build Xact, one to build, whatever the combination might be, then yeah, certainly that's the sort of stuff we can help out with. So just answer at the end on the poll for that. Okay, Dan, I'll just end the poll now in terms of job costing. Doctor, what are the results? Tell me, am I going to live? Am I going to survive construction? Well, apparently 73% of people are matching the costs incurred to the specific jobs, materials and labor, and comparing to the estimate. That's the kind of wordy version of job costing. So that's great. And it's really nice to see, actually, as we've been doing these webinars over the years, that number has incrementally been improving.
It's good, really good.
Yeah.
And that's business, right? You learn, adapt, apply, work out, obviously you're not doing this for free. Like, just have a bit of respect for your time and the effort and the process and the knowledge you have and what the client's buying off you as well. But yeah, we are seeing that improve over time, which is excellent to see. What you want to do is that you want to replace gut feel and emotion and guesswork and back of the beer coast with facts, evidence, and data. And I promise that alleviates anxiety. And once you have that information, then you can do something off it. That's business 101 stuff.
Yeah.
Not trying to be rude here, but just, they're the fundamentals.
Yeah, it's just hard though. Like, unless you're standing back and looking at this stuff and giving yourself some time to work on the business, you get caught in the whirlwind. It's hard to make those kind of forward-leading kind of decisions. The estimate, if there's a variance, what do you do? Unfortunately, 31% of people just wear it. So if you're in the 31%, we need to talk. You shouldn't just be wearing it. There are things that you can do. We've kind of listed a few top level ones here. And then the bottom one, 12%, you definitely need to talk to us. I'm not tracking things closely enough to see the variances. So that's what Dan referred to as the clench and hope strategy. Not a good way to live life. We're not the only people in town. There are other people can help you with this sort of stuff, but certainly if you've answered in those kind of categories, then let us know. There's a bunch of things we can do to help out with that. Okay, I'll stop sharing that. And Dan, we're going to get into the spreadsheets here. So over to you, everyone. Take a big deep breath in. We can do this. This is not it's not as complicated as it seems. And so let's go for it, Dan.
All right. So this process is assuming that the job costing's good. Obviously, all the invoices and amounts sitting up in COGS are allocated to a job. You clearly know that supervision should be up as a job cost as well, et cetera, et cetera, et cetera. And so like if you run your P&L and you're looking at your profitability by job, you haven't got $300,000 sitting in building supplies unallocated because the data's rubbish, rubbish in, rubbish out is the way this works. So again, thinking back to the slide presentation, make sure your bookkeeping, financial control is good, job costing is good, and then honestly, this calculation process is magic. If you are doing this calculation for the first time, usually I sort of call it like a bit of a true ups because the first time you do work in progress, you'll drop it into your figures and it's going to create a huge favorable or unfavorable movement. But what you want to do is that when you calculate this one each month, the first month you do it, don't look at the numbers, like just close your eyes and let it reverse. And then when you have the WIP reversal coming in and the new WIP calculation coming in for like the end of September, that's when the numbers will make a bit more sense. So the first time you do it's going to be a bit clunky. So say you do it in August, you let that reverse in September, do the recalculation, that's when the numbers should really settle. So just coming back as well, so the purpose of, I guess, working out WIP is going, well, are we profitable, yes or no? How much of that cash at bank is actually mine? That's the other sort of secret sauce question it unlocks. And obviously this WIP calculation helps you answer those. So what you want to do is that you want to pick the last day of the month. So call it September. I strongly recommend doing this monthly, especially if you're at sort of $4 or $5 million turnover and you have lots of lumpy projects that go for a year plus, like this stuff's going to be critical. So pick the last day of the month. Obviously, all your end of month close stuff is done. All the invoices are in. You don't have $100,000 of invoices sitting in your inbox or sitting in Dext or whatever it is. Like it's all in your accounting system. And then this will be a little bit clunky stuff for the first time, but you only want active projects in this WIP spreadsheet. If the project's done and dusted, or you're in the defect period for large commercial jobs, like just leave them out. You just want active projects in here. So it's best. So we've just adopted the Build Xact thing. So whether you're using Job Pack or Procore or whatever it is, jot down the job numbers, list out your active projects. I just love having start and PC dates or handover dates in here as well, just so you know what's coming on board. Because we actually do, particularly us in advisory, we use this for a bit of forecasting. Go, is the future okay? Is the future okay? Is the future okay? Like that's a question we always ask. So definitely drop those start and end dates in. And then as you go left to right, this is where the calculation happens overall. So this first section here is the original contract. So don't worry about actual costs or site prelims or anything like that just for the moment. This is just what is our estimate or what is our budget for the build overall. So this first section here is going, well, what is the original contract sum? So what is the contract that you signed? Cost plus and stuff like that will be a little bit rubbery, and there's actually a separate methodology to do this, but you probably could do it for cost plus projects, especially if you've got like an indicative fee. But this works like magic for builders or I guess trades that are usually fixed price plus PS or PCs. So what you want to do here is that list out the projects and list down the original contract revenue. Again, this is all ex-GST, so don't get caught in the GST trap or anything like that at all. So this is all ex-GST. So in this instance here, Kelvin Grove, the contract here is worth 561. And then as each month goes on, so you get to August, September, October, November, obviously clients going to want additional scope or they're going to want to change this or add a fence out the front or whatever it is. This number here should rarely change. Again, cost plus is a little bit different, but as you're adding in variations as well, please add them in. So we want this to be live and a fluid document. So it's all about, are we okay now? And then what does the future look like? They're the questions that we care about the most. So if you are pushing out variations, obviously to the clients, we'll update these every month without fail. This column here is then go, well, what is the value of the contracts that I guess for works underway, what is the value of those contracts? So in this instance here, small builder, 1.6 million. That's the revenue done. That bit's easy. Coming across to the next slide is, well, what's it cost? What will it cost to do all this? So we have 561,000 in revenue. What is the contract cost to build this? And this bit's critical, right? Like I see builders try and build in some overhead recovery, or you might have sale incentives bundled into this as well. I'd strongly recommend keeping all that out. We only want to have the measurable stuff in this. So if you can measure it, you can manage it. So every business is slightly different. I've seen people trying to build an overhead recovery or trying to spread rent over 45 builds. Don't do it. Just know your gross margin, get that piece right, and have to have a separate chat on that as well. So in this instance here, just fill them out one by one. They should sort of rarely change. When you bring on a new job, add another line. When the job's fully invoiced and all the costs are in, delete it out. And then same with the variations as well. So what are the variation costs behind this? So we've got a vary here for Kelvin Grove, 15 grand revenue, 12 grand cost. If your cost is higher than your vary, we have some bigger things to talk about apart from WIP. So then we have out to the side here, well, what is the projected cost to build? So we've got $1.6 million under contract, $1.3 million to build it overall. And one minus the other is profit, probably the most important number in the sheet. That bit's the easy bit. So that is what's the contract worth plus variations. Provisional sums of PCs are a little bit more fiddly, probably a bit out of scope for this chat. But if you have a lot of contracts that have heavy PS and PCs, could be pools, could be earthworks. Yeah, definitely shoot across the question. I'll try and
Yeah, and I think that's one that we would just take up as a one-to-one and as a separate call, just to unpack that.
Yeah, absolutely. So the next portion of the sheet here, and again, I've tried to put in a couple of tags here as well around, what requires your input and then what are calculations. So calculations will do the calculations themselves, but input is where we need a bit of your input into it. The two main ones here, I guess the two main pillars are these two columns. This one over to the right-hand side. So as of the 31st September, because you always do your end of month close as of the last day of the month, generally speaking, for each of these projects here, what have you built out? So this has to be invoices that have gone out of Xero, my job pack, whatever it is. What have you actually billed to the client? Doesn't include draft invoice or anything like that. What have you actually billed? That bit's usually easy. It's usually builders' favorite numbers, so they usually know those numbers off the top of their head, which is nice. The next piece, and again, we're assuming your job costing is accurate, or as 99%, 98%. This data here as to what the job costs are for each of these jobs should just come straight out of your accounting system. So again, Xero, mile, whatever it is, your month-end close is accurate, your bookkeeping is accurate, your financial controls and disciplines are accurate. That number should just drop out, ideally. So what we want to have here is, well, what are the raw costs for each of these jobs from the start of time until 3rd September? In this instance, in this example, what are those costs? That'll tell you what you've spent on the projects. These two columns, so if we didn't have these two columns here, and I'll talk about them shortly, this is a pretty solid C+ version of doing WIP. If you think about the current slideshow before, where I was talking about unders and overs and defending margin and gaining margin, having letting gains, whatever it is, these two columns here are super, super important to work out where's a job going to land. And we are all about the future. Where are we going? Where are we going? Where are we going? Where are we going? Because we can't change the past. We take our learnings, and this is all about the future. So depending on where your business is up to, how your technology is running, how sophisticated your reporting is internally, whether you have a huge team of CAs and project managers, or whether you're sort of small but have aspirations to grow, everyone will have a bit of a gut feel as to what's cooking and what's gaining on the projects. And this is sort of categorized into two columns here. So anything you drop into these columns are variances to budget or variances to the work breakdown schedule. So this is the profit gains, the letting gains, or the letting losses for those individual line items that we talked about before. So in this instance here, and again, this is just for demonstration purposes, we have an instance here where we know we've cooked $50,000 in the project somewhere. Whatever it happens to be, I've got the letting wrong, or the driveway was an absolute schmozzle, we have to tear it up and redo it. Those additional costs above and beyond what you budgeted drop in there. The other side of this is going, well, what does the future look like? So this is where we know we've cooked money and the cost to date. This one here is all about the future. So for example, you might have engaged a plumber, and again, apologies if there's any plumbers on here, it's just an example. You might have engaged a plumber for a monster project that's going to be a 3-year build. You obviously got them to give you a pretty tight quote, you use them 4 or 5 times, but let's just say they've fallen over or something's happened or they've gone to Bali to retire. And then you have to sort of re-let that package again, or at least get another estimate, and it's 2 or 3 times the price. And you go, oh my God. So this is about the future now and going, well, this original budget we had, there's some ups and downs in it. What does that look like? So this is the costs that are buried here to date. This column here is around reforecasting or forecast complete, as is commonly known. numbers like this are unfavorable, but we can have instances here where if you've tendered like I don't know a kitchen package and you know you have big gains in there, like so your allowance might be 1.6 million, you got a quote for 1.4, you need these guys 5 months time, you can actually start to release some of those letting gains or contingencies into this. But it's all about the future anyway. Like we're not going to bank that 25 grand, but it will change the forecast complete costs. So over to the left-hand side here, this is the original build cost. This is what we spent to date. This is any damage or gains we've had to date. So no knowns. This is a guess of the future as best you can. Allowances, contingencies, liquidated damages, latent conditions, whatever it is. And then this column here is where do we think it's going to land? And obviously, if this number here is bigger than that number there, no good. Ideally, we want to see that number there equal that number there, which means we're not having any cost blowouts. And in this instance here, it's actually coming under. For whatever reason, your negotiation, your sales tactic, trade gains, whatever it is, we're actually gaining some money along the way. So we do get a bit of a feel as to where we think our gross profit is going to land as of the 31st September. So obviously, at this job here, we're in some pretty serious trouble. We thought we we're going to make 100. It's actually 11 grand underwater now for a variety of reasons. Well, guess I'm going to chuck all my weight and go, what do we do? How do we gamify? How do we claw it back? This job here is only just sort of kicking off. There's no problems, no wobbles. So the WIP calculation is important. I'll talk about how we get that in the accounting system shortly, but there's a heap of other stuff that spins off out of this to go, well, what do we do with that? We don't take a knee. What do we do? So this here is all about the future. So just to summarize, contract value varies, contract cost varies. That tells you the profit we're hoping to make for our active jobs only. This over here comes out of our accounting software. So hopefully the disciplines in place are good. This is what we've burned inside the cost to date. This is a guesstimate around the future, latent conditions, letting gains, whatever. This is what we think the forecast cost is going to be. And it's all about the future. Forecasted GP. And obviously we can see here, there's a bit of hurt between the two. And then we come across to the right-hand side and we get into the WIP calculation. So these percentage completions are all around the cost base. So this doesn't use, I guess having like a QS go around on site, like, oh, the windows are 84% done, so you can bill me 84%, et cetera, et cetera. This is just around the cost base method. So not the QS or quantity surveying method or QA method. It's just the cost base. So what the percentage completion does, it goes, well, what are the costs to date, plus any overruns in place, plus any project overruns. And then what does that do for your percentage completion overall? So based on our new forecast to complete costs, we're 49% of the way through the job. Similar to this as well, we've actually spent 85. We've saved 25 grand along the way. So obviously the readjusted forecast complete base is down. It's no longer 659. We're actually expecting it to only spend 634,000. So when you go 85,000, when you go 85,634, we're 9% of the way through the job. So if you're 9% of the way through the job, you're entitled to 9% of the revenue and 9% of the profit. So we scroll across to our work in progress calculation over to the right. What that means is that when it's negative, it means we have negative WIP in place. That means that we've claimed more than the cost base that we've spent overall. So we've obviously spent 9% of the project. We've invoiced 10, 11, 12%, and there's another calculation in place to do that. So a chunk of that money is not yet yours. But I love negative WIP. Negative doesn't mean bad. Negative means that's not yours. Don't touch it. These other two instances here, we're actually ahead by a fair chunk, 85,000 and 40,000. So we're spending a truckload of money, but we just haven't invoiced out for it yet. That's what that means. So overall, this business here, and this can go up and down, projects, rain, banks. Obviously, stage claims can be a bit of a nightmare. You could have the roof 95% done. The bank comes out and says, no, you're not giving us an invoice for that. Wait till next month. So this can flick up and down, depending on the game that you're playing as well. So in this instance here, this builder, trade, whatever it is carrying a WIP asset of 115,000, which means they've spent more than they've invoiced. And if they total it up to the bank asking for a loan, your profit and loss would be understated by $115,000 in profit. And your balance sheet would be undercooked by $115,000 in profit. And if you want money for renovations or money to do your own house or development. So you want to make sure that P&L on that balance sheet is pumped up nicely
Mhm.
and it makes sense. And again,
And
this
so
was,
we can
yeah.
imagine, with like we've got 3 projects in place here. So this is a pretty small builder. As you've got 10, 20, 30 projects running simultaneously, that number becomes even more material, and critical that you're dialing in those costs that you've now incurred over and above what you thought you were going to wear in the estimate, and what is going to be coming up. Dan, I think we've gone through the tool there now. I thought we might just quickly, I just wanted to talk, we're going to get to these questions. We're just coming up on the clock. So I might just quickly share my screen before we get to those questions. I wanted to just quickly talk about our next session that we're doing. This is so we've started doing these in-person sessions. This is an intensive workshop on strategic planning. It's an in-person in our office in our boardroom here in Brisbane. We're doing these as small cohorts, so there's only 10 people in each cohort, and we're running them each month. They run for 3 months. So it's a half day a month for 3 months. And in that time, we'll work with you. Our advisory team will work with those 10 people to build out their strategic plan. It's like a boardroom level strategic plan. It's a really important document in terms of aligning you and your team around the goals for the business, around your growth strategy, the sort of customers you're going to take on, what are the sort of financial settings around your growth strategy, when might that break as you grow, and so therefore what do we need to put in place to make sure that you can make it from one jump to the next in terms of your growth strategy. So we're going to do that over 3 months, like a half day a month, and it'll be with a small cohort, only 10 for each cohort that we take through, just so we can get the numbers right on all of that. We're getting people to do an expression of interest so that we can slot you into the right cohort that works for you from a timing perspective. So we've got a poll at the end. You can answer whether you're interested in that session. And so there'll be more information coming on that. Dan, these questions in terms of
Yeah, I can rip through them.
yeah,
That's all
yeah,
right.
that'd be good. And
Um,
while you're doing that, I'm going to put up the poll around how to get a one-to-one with us, etc. So you just keep pushing on there, mate.
so a couple of questions. So I'll just go back to the top here. Yeah, so it's a question around bookkeeping, working together with other accounting services as well. So obviously, got those 3 divisions: tax, compliance, advisory, and bookkeeping. We all talk to each other. We're in the same building here. We get a lot of synergies out of that. So the answer is absolutely yes. Um, so another one here. So based on my understanding is that WIP data is specifically for project performance only and does not take into account other business expenses, but can support them by providing the forecasting. Absolutely yes. So WIP is all around job performance, where's it landing, and it obviously gives you a wider business view as well. It doesn't give advice around overheads and everything like that as well, but it's around, are we making money? Yes, no, and then what's ahead of us? And then when does our margin run out and stops covering overheads?
Yeah.
Yeah. And then obviously, if you have a strong set of financials and say you've got plenty in the pipe and the future's looking good, well, what do you do with that? How do we double down, grow, or do we just build a big fat moat and go, let's keep people away and just focus on what our niche is or what our turnover target is? So it's just around project performance, absolutely. So I've got another one here. The value that each job is less than 50,000. We invoice 3 to 4 stages. Do you recommend adding WIP to the balance sheet each month or only when we need to report to QBCC? Absolutely every month.
Yeah.
Obviously, I'm a bit biased here, but I want to know, like if I was an investor in your business, or obviously if your family's feeding out a business as well, like I'll tell you monthly whether you're okay or not. And then by the time you sneak up to QBCC or the regulator, well, there should be no surprises. We don't have to do the clinch at home and go, oh my God, I'm okay. Absolutely monthly. It'll be
And all jobs, everything, everything that's happening in the business. And even if you're small, I mean, I know it's hard when you're starting out, you got to wear all the hats. But this financial clarity piece, if you know, imagine trying to set this up when you're at 20 mil, 30 mil, 50 mil, and we see that. But you know, get in these sort of behaviors now and get these systems set up now while you've got 1, 2, 3, 5 projects in play. Because it's that sort of system and process approach that will support the growth.
Systems, processes,
Yeah,
repeatability, scalability. That's the formula.
yeah,
It just works.
yeah.
And then what is the best way to be documenting our monthly WIP stats? You recommend using the template and just duplicating it monthly over the financial year? Absolutely. So once it's inputted, it's a living, breathing document. You wrap a job off, delete the line, add the new job on when it kicks off. Do you enter this WIP number monthly into your balance sheet in Xero? Absolutely. So there's 2 accounting entries. One obviously goes to the P&L and one goes to the balance sheet. And there's a push and pull there. Absolutely. So in the template itself, there'll be like a little journal to enter in there. Yeah, so absolutely monthly. Like drop into Xero. You got trend, history, which is what banks and shareholders will want. And then a good question here, Brenton. Would you recommend adjusting WIP for development projects that are underway in progress? And if so, would you base the WIP on the net realized value of the development? Really good question. There's 2 things in place here. One is the developer, and then one is obviously the building construction, I guess the build contract. The development piece and the feasibility is absolutely separate. And ideally, and again, I made a couple of assumptions here. Hopefully, there's a separate entity compared to the builder. Like you want to separate that risk. Even if you are doing cost neutral, I probably would have something in place to recognize the WIP. I wouldn't do the net realized value. Hopefully, there's an intercompany charging mechanism between the development arm versus the building construction arm. So net realized gain, probably not. Just treat it like any other build contract, whether it's for, I don't know, a mum or a dad or a family or, you know, a tilt-up panel piece or a 6-pack. I just treat it the same way. That'll be cleaner. Otherwise, you're forever going to be adjusting to market. It's just going to add noise and probably not a lot of value either. And the strategy to sell it is different to the build, so I would keep it separately, personally. Good, yeah.
Can we can we jump back to the one around negative WIP and talking to the bank? How do you front load it? That question, I just didn't want to miss that because I know we parked it for later.
Yeah. So how do you push negative WIP against banks? Is send out queues. Yeah, it's an art more than a science. There's a whole separate piece around the art of the deal, and I think there's actually a book called that as well. There's a couple of ways to do it. Ideally, it comes around client selection. If you find clients that have truckloads of money, you don't have to use a bank, you know, tick. You know, that's obviously nice. Towards the start of the build, like the reason why banks don't like negative WIP is if you tip over halfway through or something happens or a contract dispute, the bank wants to be able to fire sale it and not have any exposure. So if they paid you a bucket load of, you know, $1 million and it's a $3 million build, then you've only sort of spent $400,000 and they can't sell, like that's why they don't like it. Usually I sort of find, particularly when you negotiate with banks, is that I usually like to see, particularly at the start, you'll carry positive WIP. And then when you reach the middle of the project, there's a lot of complexity on the go, and banks aren't very good at deciphering what's on the job site as well. That's usually where I sort of find positive WIP goes to negative. And then obviously when you reach the end of the project, there's no WIP because you build everything, spend everything. A couple of things around that. Client selection, ideally no banks. At the start, it'll be heavy. Obviously, the more frequent the claims are, the better. And I'd probably encourage having more stage claims in there. So don't just have 10 monstrous ones, have small ones. Because if you have lots of rain, your next stage claim's getting the roof on, but you're doing other work in place, and the bank's going to go, oh yeah, it's black and white, there's no roof, you're not getting it. I'd probably encourage you to have more stage claims in there. Because if you have sort of like one every fortnight, rather than waiting 30 days, if you have 14 days of your cash flow tied up in the business, or 30 days plus another 14 days until the bank decides to get to it, that's how you can sort of shorten up that positive WIP and get back to at least a WIP neutral or negative. But a lot of it will be in the negotiation as well. You know, hey banker, hey financial advisor, you guys are the bank, you guys are funding it. You know, if you don't help me with this, I'm at risk of, you know, tipping it over or chase something else, or I won't care. It's in your interest to make sure I'm successful here. I succeed, your client succeeds, we all win. So, you know, give us a bit of a hand. As an example, like we're dealing with a really large client at the moment, 6, 7, 8, 9, you know, 9 figures, and we're negotiating with the bank at the moment for about a $10 million procurement deposit on a job. And it's literally a kill or pursue. Like, unless you give us this, we're bloody good at what we do. Here's our resume. Here's our unique selling position. Blah, 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 blah. You guys need to cough up some money. Yeah, so it's the art of the deal. So happy to talk to you separately about that one.
Michael's got a question in here. If you have 100,000 negative WIP at the end of the month, do you need at least 100,000 in the bank to cover the negative WIP? This is the whole, my financial position versus my cash position, my statement position.
Uh, really good question. In principle, yes, but obviously building construction, there's a lot of moving parts. Obviously, if you're a trade-based business, like your overhead load to carry the business will be quite different to say like a commercial builder where all the people on site are job costed in.
Yeah,
Um,
business model plays a big role here, doesn't it?
yeah, so like if you're carrying, so for example, if you're carrying negative 500K WIP and you're a 5 mil term business and you've got no money and 300K in your overdraft, I'll be sweating just at a high level. Whereas if you have a huge amount of cash in the bank, call it 500,000. So the ideal war chest is loosely 3 months overhead plus wages. Like that's the ideal war chest or zero balance. So if you have 500K of profit, people owe you a couple of $100,000, you haven't touched the overdraft, and you've got like, I don't know, WIP neutral or positive WIP, happy days. Ideally, I'd love to see 700K cash, negative 300K WIP. That gets you back to 765, 400K, happy days again. But if you
Yeah.
have negative WIP and no money and overdraft, yeah, I'd be a little bit more concerned.
Righto. All right. Annual
Wages.
wages or wages for 3 months?
No, wages for 3 months. It's just
Yeah.
a rough rule of thumb as a war chest, but it's a break in case of emergency.
Yeah.
It's obviously cash talk. So 3 months of overheads, 3 months of wages. That's a good size war chest.
Yeah. Okay. I think we're over time now, but it's been excellent. Thank you for all those wonderful questions. I think hopefully everyone's got a lot out of this. A reminder, we'll be sending out the follow-up, so it'll have a video, it'll have links to the tool, so you can download the tool. We'll be sending information about that strategic planning intensive. It's a really important thing to have that kind of a document in place. It's a living document. You can have your whole team and suppliers, everyone align around where you're heading. So we'll be sending more information out about that. Looking at probably a forecast to complete, a forecasting topic as probably our next major workshop that we want to do. Being able to see the future and predict it more accurately is a big part of the construction game. So we want to help out with that. Thank you, Dan. That was excellent, as always. And thank you, everyone, for joining us today. We hope to see you in one way or another down the track. Have a great day and go well out there. See
Thanks,
you, team.
everyone. Have a great
Bye.
day. Bye.